Hello. It's not about. It's not about how many plays you can win in a row. It's not about that shit, man. It's about what you can learn, bro. Honestly, focus on learning. Focus on that stuff, bro. Why did I log out, man? Gosh dang. Of course. I think it's this one actually. I don't know. Are you loading or? Come on, man. Thank you for coming in. Focus on learning, though. You know. Come as you are. And it's so important to keep it positive. Keep it positive. Don't feel like you're slaving to this stuff. Alright? Keep it positive. Keep it fun. Make it fun. Make it something that you think, that you know that you are learning, bro. Have hope. You know? Okay, sweet. That, that's a nice one. And from the continuation from there. So, continuation from there. Breakaway. Well, like those, bro. And then after that, yeah. And from here, it left equal highs here, just to go right down to Asia low to this new big opening, and then tap the lower half, and then start to go from there. Nice. Okay, so this one right here was immediate rebalance. Start to go up higher, so we can press that up close candle. I enter for 1-to-1, and then we use this. It's gonna only for you drill for right gap to continue price higher. And the confirmation was the immediate rebalance. This candle, the bullish, go up higher to the buy side. And I don't have a gun. So we entered off the dunkless candle because we thought it was a extra order for like basically something like this. What we just saw. So boom, hit the right gap. Whatever. This hit the right gap at the dunkless candle. We thought it was gonna continue down lower. Actually failed to do that. And from here we started to go up, make its way, then tap the CE, and then tap the lower half, and then drop down. So this one right here was equal highs, right, equal lows, and we had a nice sweep of this low right here. We failed to continue past that, and then we came back up, closed up over here, and then yes, it was immediate rebounds from here, SMT, and then we had that huge wick. That's our confirmation to continue higher, pretty much. And I just want to see if you're going to 5. I don't have it marked, question mark. There you go. So this candle right here, I'm like, okay, let's see if we can close below there. I knew we was gonna do that. So this right here was a confirmation candle. So when we have a long wick, top, large body, that could be a signature of continuing press down. Looking at the whole picture, we're inside of a order block, and then took out the high, could have failed to go past that high, and we just drop down basically like in a trend line basically. Right, catch me down right into the city. I mean that's what cruising with the top off. Man, my whip's so big when you in it. But if I'm getting lost. Alright, I'm gonna just watch my YouTube. I don't know about that life right now. When they done. I think it's Q7I, something like that. I think that's what it is. Level Q7I. Oh, it's dash. It's dash Q7I. Not 1, but I. What? Level 1. There you go. Take your time. Hurry up.
What it takes to be a good trader. What it takes to be a good trader.
What was this?
How the market is manipulating you. How are you reacting to certain things? How does it RR?
I did Eagle run, right? I did, and this one was this one had TP.
Yeah,
You know, apologize.
Kiss me after the city.
I did.
Oh my god.
It's gonna say, bro, she's
Right
Hey,
over the
Walker.
top off.
I did. The same way. That was somebody. Cook. Sorry. Nice to meet you. Wait. Alright. Oh,
Yeah.
Good morning, folks. Happy Saturday morning. The 1 minute chart here. We're going to
I tried every type of ED medication, Viagra or sildenafil, and Cialis or tadalafil. I know this works for some people, but I did not get reliable results.
go right into that. And level here. That's the financial industry. Some of them claim to be market makers. Some of them claim to be, big wigs in the industry. Some of them are talking to you from the TV, right on the stock market floor. And they'll say these things are not really there. You're welcome to their opinion, and you can subscribe to how you want. I'm not going to change the tune I'm saying, okay? I'm not proving it. So it's not imperative that you view it my way. It's not imperative that you believe it's an algorithm. If you just look at this and say, okay, I'm just going to use this as a technical approach to doing it, and I'm not going to get out there and get in an argument and get caught up in the minutia of defending or arguing against the idea of an algorithm. That's the least important factor. The main thing is I'm trying to teach you how to use these tools. So if you feel more comfortable, never referring to an algorithm that's controlling price, look at it as this is where the buying and selling pressure is going to end and start. Okay, that way we can put this to bed, and I don't have to beat up on everybody else's approach to trading. So when we have this like this, and we don't have a time-based range that defines a specific dealing range, okay? Annual range is in and of itself not important. But when we look at very specific time-sensitive ranges, then it means a whole lot. So as I mentioned in yesterday's video, why did I talk back to this high? Why wasn't that important? Because it's not the time range I taught you between 7 o'clock and 9 o'clock in the morning. Inside this little shaded area, you went on the highest high and the lowest low. And the comments were saying, you didn't know that low was there yet and it was going to not go any lower. You didn't know that. What are you talking about? What's this little red line indicate right there? Right there. That's 9 a.m. That's the end of the 2-hour session of 7 a.m. to 9 a.m. What are you talking about? You didn't know. You didn't know that range was there. What are you talking about? Everything shaded in that box here, it's finite. Now we can start using this range and derive specific price points. Okay, so this is the multiplication table. Okay, the candles at which we want to start looking for the horizontal price axis, where the price is going to be. This is the time aspect. Okay, so we have time. We're taking a sample set of all the data out of a particular trading day. Only 2 hours are here. Okay, and I'm not cherry picking this. Students have been with me for a long time, known for a long time that I've told you to focus between 7 o'clock and 8 and 9 o'clock. So 7 o'clock, 8 o'clock, 9 o'clock, there's 2 hours of trading. It's one opportunity just for you to be a trader and be done, or you use it for key information that will warrant more attention on very specific price levels when time agrees with it. And I'll get into that, okay? So if we then add the fib to that range, what I've done was I've taken the fib, I've anchored it to that low, and I've dragged it all the way up to that high. That's the highest high. That's the lowest low between 7 a.m. Eastern time and 9 a.m. Eastern time. Not complicated at all, okay? Because I expected price to rally higher, because it drifted lower all during the 7 a.m. to 9 o'clock session, and because I felt that 28,400 was going to get tagged, we traveled a lot on the upside since FOMC. And it's Friday. They're going to do a deep retracement against that. And it makes sense for it to rally up and take out that buy side here. And if you look at this high at 7 a.m.'s range, the 9 a.m. range that's shaded here, that high is slightly lower than that one. So doesn't that make this relatively equal highs? Sure it does. So if we can go down and take out this minor sell side here, and then close the 7 to 9 a.m. time-based range, so now we have a very specific range upon which we can grade it. Okay, so I'm going to show you. I'm going to take the fib. Again, there it is. We're going to anchor it right to the low, and we're going to draw up to the high right there and drop it. Go into your fib settings. You should have a -5. I'm sorry, negative 0.5 right there. Watch right up here. Okay, see that? That price comes in at 28,723 even. I'll make the text a little bit. You can see it. See it? Right there. 20,723. That's the projected daily high. I did these things in Forex when everybody claimed I was using a rented white label broker, where it's not even a real broker. You get to type in what your executions were. You don't see me typing in no executions. You see me pressing the button and putting trades down on live data. Okay, so we're going to leave it like that. Okay, so now actually I didn't include the other levels, did I? So now you want to leave, there's your lower quadrant, upper quadrant, octant, and final octant. So now we have those levels here. Okay, and I don't have the half level. There we are. Now it's complete. Okay, so now I walked you through the entire process so that way you can replicate this on your own chart. Okay, and now because of this, we can go and scrub on over to make the chart a little bit more friendly on the eye. Now at this moment, right here, at the end of this, okay, at 9:01, any PD array that forms and anchored to, let me add the high and low, I'm sorry, I forgot that. There you go. It forms at one of these levels here. The candlestick has to touch it. Lay across it or touch it. Okay, it has to have some reference point where it's tethered to these specific key levels. I don't care what you subscribe to or believe in. When you start looking at the market like this, when I give you very specific levels, when I give you very specific ranges to operate in, you're going to find that there's Swiss timepiece precision there. Now, you watched me execute this short up here. You watched it. That can't be done with retail stuff. Okay, it can't be done. Nobody else's methodology expected a run starting here, up to there, and then aim for 28,400. It doesn't exist anywhere else. I know because I've studied everything else extensively. Everything else. Now, does that mean you should abandon what you're using and making money? No, absolutely not. If you have something that makes money, wonderful. God bless you, and I'm thankful that you have that. I want all of you to be profitable, even if you don't use my stuff. But I just want you to explore some of the things I'm teaching because it may help you ferret out better trades that maybe your system might not do very, very well with, and you'll get caught offside. Okay, so again, I'm not trying to be anybody's adversary here.
You know, I'm 48 now. I've been touring since I was 15 years old. I've spent millions of dollars on my house.
34 years this November. Okay, I've been looking at the market with these types of interests. Like, I want to see, how does it form the high? How does it form the low? How is it forming session highs and lows, like the AM session? How is it forming the high and the low in the 2 hour, 7 o'clock in the morning to 9 o'clock in the morning period? And by studying these things and collecting information on the process of how it creates them, what does that mean? What I just showed you here. If you're not logging and journaling like this and actively pursuing the mechanisms upon which how the market books price, and you're just listening to people like myself where I say, I'm going to use a fair value gap here, you're not doing yourself any justice by just saying, okay, he's good at picking them. I'm telling you how to go in and find the information and grow a measure of trust in it, because no one's going to say what you discover that has consistency isn't active or valid. No one's going to be able to do that. Just like nobody that has spent time with me years behind the paywall or before the paywall or after the paywall, and you can spend time with me on Calling the Market Live. You see it. You see what my students are able to do. When you start doing these things, when you're backtesting and you're logging and you're studying how do highs and lows form in sessions, daily highs, weekly highs, because you're going to see these same repeating phenomenon. They're not random areas. But until you start looking at wicks the way I teach them, you'll never see it. You'll never see it. They put these books out there and they let authors get popular, leading people astray. If you have all these people around the world constantly telling everybody the sky's really green and don't believe these people that call it blue, enough people, I'm convinced, especially now in the state of the world, there's going to be more people out there saying, don't you call the sky blue. That's how we are right now as a society. They've put us in a position where lunacy is achievable with given enough time and influence over it. I'm just trying to be a voice of reason and say, listen, you see me keep doing these things all the time, all the time, all the time. And I can get real, real close to the daily high and low doing what I'm teaching here today. I showed it to you. I literally executed it and showed it to you. And I used to do this behind the paywall when I was teaching. And if I was failing there, they all would have came forward and said he wasn't able to do that at all. But you see them. You see them come forward. I was a charter member. I was there for this year. I joined this year. Every single day I was held to this expectation that I had to call the market, where it was going to go. What key levels would it respect? Think about it. You don't ever see anybody coming forward with anything saying that that didn't happen. And now you're seeing the same thing that I was doing behind the paywall. You all get to see it now. I told you. I'm the only person that can sit out here and tell you with great confidence that my stuff isn't going to fail. I could mess up and do something different, and I'll have to course correct, and then I'll be fine. But everything else is guesswork. Everything else is a religion. Like you're subscribing to a view that has absolutely no merit or basis as to why price is going to go up. It doesn't matter how many times you find it worked here, it worked there. When I talk about the market and my concepts, I'm very, very specific. I'm explaining it in a manner where when you really understand it, it is an absolution. It's not a guesstimate. It's not a assumption. It's not a ambiguous zone. Okay. So while there's a clustering of certain things in here, let me go back down this and I'll end this video because it's really getting too long. Could go on, but it's Saturday. I want to get out and do some things. If we have the ranges in here like this, okay, that's been defined, and we have a level here, a level here, and a level here. If we see that, we can take the highest one to the lowest one and measure it like this. Right on here. And see, okay, Saturday, I want to get out and do some things. If we have the ranges in here like this, okay, that's been defined, and we have a level here, a level here, and a level here. If we see that, we can take the highest one to the lowest one and measure it like this. Right on here. I'm just going to eyeball it. I'm going to spend a lot of time trying to get perfect and put it right on the level right there. Okay. So now we have this level right there, and we'll make it a solid line, and we'll make it blue. And it's the biggest one, right? Yeah. Look where the body stops. Think about that. Look at that. And think about the logic that I teach you in regards to order flow. If it goes down to half that, even though it wicks and goes past it, but the body comes right back here and closes, this is our range. Okay. And then in that range, the high, the low, we have a very specific one right here. And then you can do measurements and gradients. I ain't doing all this, bro. Just give me an overbought and oversold indicator. Okay, go do that. Have fun. Hope you're profitable. Hope you're able to meet your ends and live well and no complications in life. I would love nothing more than to see all of you be successful. It's not imperative that you use my stuff. I'm just trying to encourage you to just think outside the box, okay? All right, so body, upper half. Use the high one, straight down through upper octant, upper quadrant, and fails to touch the next octant. And then up here. Is that bullish or bearish? Bullish. More so because we have the bodies down here, and we can't even leave a body back down inside of this area that was used to try to project the daily low. Now, don't let the amount of selection and measurements dissuade you from pursuing something like this. The way you get good at it is go back and study your old moves like this. Just pick one day a week where you have about, 30 minutes, put some cool, nice, relaxing music on, zone out, everything else, and just look into the charts and go in and start studying on the daily chart. That's where the information is derived from. Not the weekly, not the 4 hour, not less than a daily. It's always inside of the daily chart, because that daily chart is going to give you the cap on the high and the low. Daily ranges are defined by a daily chart. So the information in detail comes from that one particular time frame. So I'll leave it to you, ladies and gentlemen. You tell me, did you see anything marvelous this past week? Did you see things explained beforehand? Do you feel inspired? Do you feel like you want to dig into this rabbit hole a little bit more? Spend time with the old man? As I mentioned yesterday in Traders Roundup, I absolutely feel that I'm really going to wind down over the next 2 years. So not wind down in my pace, but whatever I do over the next 2 years, that's like the most I'm going to do. And then when I get to 2 Junes from now in 2028, I'll be an empty nester. My wife and I are going to be doing a lot more traveling, and I won't have as much time to be able to engage with all of you. I want to do at least a weekly, thing with y'all, because I just want to keep it active. But as far as a daily engagement videos like you see now, I'm not going to be able to do that. And I'm actively pursuing things that we're going to get involved in as a couple, and it's going to take a lot of our time, and my time as an educator will be minimized because of that. So it's kind of like the golden era of ICT. There's been a few times I wanted to walk away from it, but I'm getting older, folks. My wife's getting older, and we won't have any kids in our home. So we're just going to get out and get stuck in it. So, all right, folks. Now we're going to focus on applying the opening range gap. So we got to go to 930.
With Ring, your home, it's protected. Know that packages are safe at the front door and keep suspicious people away from your yard.
You are currently being recorded.
Wrong house, bye!
Your home, front to back. With Ring, it's protected. Shop now at ring.com.
Right there. Okay, so that's the opening price at 9:30 Eastern time, and it's the high of the opening range gap. And then we have regular trading hours. Click on that. And then we'll go down to right there. We'll add that. And the price is 20,324.75. So that is the opening range gap below. Now we can go back into electronic trading hours. All right, so now we can measure and grade that range here down to there. Make sure it's the same levels. Check everything. Okay. For the high, we have 28,576.75, and for the low, we have 20,324.75. Everything is copacetic. So now we have to make sure everything is highlighted, so we don't need that yet. The levels are there, and now we're going to move this over. Make sure everything goes to the right just enough to show where it is important. Okay. So now we have our opening range gap. We have it graded out. Consequent encroachment is here. So half gap, 70% of the time, gets traded to by 10 a.m. It trades to it here at 9:43. Now we have PD arrays. They're over here during that 7 to 9 a.m. We're going to blend things here. We have not only a fair value gap right there. That's the 9:30 opening price. That's the tethered level. Okay, so our horizontal levels like this. In other words, the price relative to time. Time is 9:30 opening to 10:30 here. So we have another time-based range. It's the first hour of trading. There. Okay, so we have a low and a high. We have to subscribe to whatever price is going to do in here, and then we'll come back to that information. But for now, there's the hour-long trading. So first hour dealing range, low. And then we'll make this purple. Why are you always picking purple? Listen, didn't you like Prince's album, Purple Rain Man? Like, that was a great album. We lost a genius when he passed away. Right, and then now this is the first hour dealing range high. Incidentally, talking about Prince, his song, I don't know, sorry. I'm going to go down a rabbit trail. It's probably not appropriate for YouTube anyway. Maybe I'll bring it up on X another time. I think it was one of those cliffhangers. I mean, why you do that to me? Now it's going to bother me all weekend. You know how it is, and old man likes to get you talking. So there's your range high and your range low for first hour's dealing range. But now let's focus in on the opening range gap. So right inside of here, let me take this away. I have to leave it there. Get two. Overly concerned. So inside this little box, we'll shade it. Dude, you could taught this with less time. No, you wouldn't have learned anything. The fact that you're trying to look for a shortcut, you can't appreciate someone literally sharing their craft with you, then you don't deserve to be taught. There's that. All right, so we have the opening price at 9:30, and then we drop down from my short, which I don't expect the majority of you to be in that, okay? Price returns back to 9:30 opening. So we trade below it, then we trade up, fall short of it, and then we open lower and trade right up into it. This is occurring at the same time we are in an old gap here. That's going to act as its first utilization, which is sell-side delivery. That means when we're bearish, it's going to be a premium PV array to send price lower. It's being respected there and there. In addition to, we have fair value gap. Okay, I'm going to take the midline out because it'll make it a little easier to see everything. Nice. All right, then we have another level here, which is the upper octant, so 930 level. Then we have the upper octant. The upper octant trades up into this one here and this one here. So this is very significant because it's touching two of them, and we'll get to that in a moment. But for now, we're going to borrow this as well. Where are the bodies? In this gap, over here, in this gap. Staying below. Once we close below here, we opened, trade all the way up to that fair value gap, and then drops down. Open below it, trades up into it, trades lower. We have a gap in here that forms at the upper quadrant. It's a breakaway gap. Why? Because it's above consequent encroachment of the opening range gap. Remember, our opening range gap is here to here. So half of that is this red level here. And above it, we're in a premium. If we get a gap after leaving a consolidation where we have 1, 2 candlesticks working inside a range between 2 PD arrays, then we have displacement lower. We want to see this act as a breakaway gap. Okay, so nothing gets traded back up into there. We have this candlestick laying on top of consequent encroachment. Over here, we have buy side and sell side efficiency that was salient at this time. Project it over. Its first utilization was what? Buy side delivery. That means that the market's bullish. If it's above it, it trades down into it and sends it higher. That's what we see right there. 901. Now we're looking for prices to try to get back down into the trading hours range gap low, or what I tweeted my objective was, I want to take it down 28,400. So if we're here, first utilization was bullish, we're bearish now, it's going to act as an inversion of fair value gap. See how the logic is very simple. It's complex when you don't know the details and you're not interested in learning any of it. So it's reasonable for you to feel like you're disjointed and you can't connect with it. But it takes a little bit of effort and you got to study it, okay? We trade lower, we open down here, come up into it, wick, leave no body in it, and come back down. Is that bullish or bearish? Bearish. Now we have this level here. This is the lower octave below consequent encroachment of the opening range gap for Friday. So we're looking at time-wise from here to here, okay? We know these levels, okay? So don't get tripped out. You don't know if it's going to go down to that level because this hasn't happened yet. The opening range gap is there. It's there. Like you would see it like this. So that gap is definitely there. So if we know that gap and we grade it, we know how the PD arrays should form.
Right now, America has a shortage of over 20,000 gunsmiths. And that means...
Where are they going to form? At what level are they going to react off of? And that's these levels. The high quadrant, upper quadrant, octant, consequent encroachment, octant, lower quadrant, octant, and then the low at the trading hours range gap low, which was Thursday settlement price for the trading hours at 4:14 p.m. Eastern time. And then the market uses this level one here. It's anchored to this candlestick right there, and nothing is happening until we get to this run there at that wick, straight up into the upper half. The bodies are left below here, and we open right where the beginning of this wick is. We open up there and sell straight off. This level is that sell side liquidity pool that I tweeted here. We're going to take that level off because it accomplished the method there. And now in here, we have this up closed candle laying directly on the lower octant, the one directly underneath half of the gap or consequent encroachment. So when we open here and we trade up, what we're doing is we're trading up into this order block. This is a bearish order block, trades up to it, and then sells off. So the market just drifts down and gets to our regular trading hours opening range gap low. Hang around here, back and forth, and finally get up, goes and breaks lower. So we filled the gap. Now we're breaking beyond the gap. So when I see that, I teach you also that you can do the 930 opening price down to the previous settlement price, and I'm just going to rough eyeball, okay? And then we'll add the negative 50 level, and it'll give you an area in which you can expect a retraction down to that level. And then we can also do it on the -1. Okay, and you'll see there's your low, projecting that, and we got real close to that. See that? Real close to it. Then trade it up, and we're back inside of all this. So all this opening range gap here. Then we'll do this. Extend to the right. Premium is at this or higher in the opening range gap. Premium, trade back down in, consolidate during the first hour of PM session. And we rally out, take out buy side because it's relatively equal highs here, and trades right up into, where's the bodies? Look, where are the bodies? Below upper quadrant. And then it breaks lower. What's this? It's buy side balance sell side efficiency prior to relatively equal highs being taken out. There. Okay, so you see these guys on the internet. They're all over YouTube teaching you smart money concepts, this, and this is where the real fair value gaps. None of that. None of these guys know anything. They don't know the real fair value gaps. I'm teaching you literally how to get it. This gap is prior to these relatively equal highs being taken out. Okay, there's people out there that will say this is the fair value gap. Once it breaks out here, if it comes back down into that fair value gap, that's where I'm really interested to go long down. And that's not me. I'm interested in that for another reason. It's become a bearish inversion fair value gap, and that's seen like this. Yeah, gotta make sure the old man's eyes are showing what the candlestick is actually provided. So we have a volume bounce definitely here, and there's no volume bounce there, so this needs to be anchored to the wick low, and we'll drop this right as it should be. And look at that. Look at that. We break lower after we've taken out relatively equal highs up here. The bodies are stopping at the upper quadrant of trading hours opening range gap on Friday, and then we have this big displacement lower, and we enter into this area here. We close below midpoint. We open, trade up, and come back down. Opening, trading up, drop back down. So immediate rebalance is something I teach. That, like for instance, here to there. It's if you have this candlestick here and this candlestick closes, the very next candle can come right back to that and be an immediate rebalance. Let's say for the sake of argument that this one didn't touch that candlestick well, it would need to be the very immediate candle after that, and both of them actually do it here, and they're not putting the body above the midpoint of this inversion fair value gap. So if the gap that's prior to, while bearish, looking for relatively equal highs to be taken out, that's your gap right there. Now think about it. Is this hard to see? There's no other gap in here. How are they hiding that from you? How are they going to hide that? Go back and look at old moves. Even before you started trading, it's always there. always. Why are you whispering? It's creepy, guy. So here's your inverse fair value gap. And you got to include the candlestick that has what? The volume bounds. So this candlestick is touching and is tethered to the consequent encroachment level of the trading hours opening range gap. There's your short for PM session and settlement MOC type thing if you're a trader that wants to hold on past that. Opening range gap for trading hours below. I'll take that shade area off now because it's not helping me, it's distracting me. And we break lower and trade down below it. So just a wonderful opportunity of seeing how it behaves here. And then after hours, rips through here, straight down into this low. These are relatively close. That's pretty obvious there. And then it closed right here, below opening range gap low. So again, I'm going to leave it to you, ladies and gentlemen. Very close call for a projection, just simply using the opening range gap high at 9:30 to the low at previous day settlement at 4:14 p.m. Eastern time. You can do something like this also. When you have a climax reversal high like that, where it's moved to the zenith point of turning that high, and then we'll drag the fib to the low right here. Okay, see that? So this is your price range. This becomes a fulcrum point. A fulcrum point's like a hinge. Okay, imagine all of this rally here is a door, and the hinge point is right there. And if the door could swing around and go past this low, it would swing equally right down to that price level right there. And notice how it's also getting very close to where the market had a turning point. So when you get all these things kind of like blending together, it gives you a really rich tapestry to anticipate significant price runs in the opposite direction, or at least be settled for the day. And we booked pretty much the lower end levels that I've shown so far in this lecture. Admittedly, the average student isn't going to be this interested in it. Maybe you're not interested in it right now, but once you get better at trading the simple stuff, by exploring the market with these types of perspectives and seeking a little bit of depth into where key highs and lows form and how are they forming, and doing standard generic measurements on the PD arrays and the things I'm teaching you, I wish there was another book or a teacher or an author that had done these things, because I could very easily say, go look at this person's stuff. In addition to what I'm showing you here, it'll help you. But I don't have any help. Like this is just mine. And I said it many times, I'm not the best teacher. Like I'm the only person that has this information in his head and understanding. And I try to do my best to try to come up with a way where I can explain it to you. And I pray all the time that God gives me more wisdom in a way that I can transfer the information. Don't fall victim to someone taking my teachings and the things I say in between that are helpful from a psychological standpoint, or maybe I'll say something in jest or whatever. They take my videos and they'll take all those parts out. And you think you're getting the easier way, the best way, the short distance between A to B, and you're getting it diluted down to what works, but you're not listening to what makes it work. Like everything the majority of what I showed you here today, like if you take out any part of that stuff where the details of why you should look at this versus that, there's no way to condense it down from that. That's the purest form of what it is I do. And there's no shortcut around that. And if you're going to try to work towards a measure of precision where you can short the high of the day, or buy the low of the day, or hold for both points of reference, it's going to take some study time, and it's going to be my material that you have to study, because nothing else out there gives you that. And if it existed, it would be the hottest thing. Everybody would be flocking to that. Everybody would be talking about that. You would see everybody on YouTube, mentioning that stuff, and it's not happening. It's not happening at all. So I share this because I want to inspire you to pursue greater understanding in your own hands, and you'll maybe get an epiphany, finding something that maybe helps answer a question that you have that's just gnawing at you, and maybe it's something that you don't even know how to ask a question for. You just don't feel like something's been given to you. I've given it to you. What you're experiencing is I'm giving you the science. Okay, I'm giving you the technical textbook definitions of everything. And a lot of you, much like you do in college, you want to go out and buy the Cliff Notes version of it to be familiar with it, just to get a passing grade. I don't want to teach traders just to get a passing grade. I want traders to learn from me, to be able to read these price moves and anticipate before they form, and have confidence in knowing their analysis is likely to be delivered with a measure of sheer precision that is mind-boggling to anyone that sees you do it. And believe me, you'll never get tired of it. It's so fun. It's so fun when you're able to do these things. And for decades, I sat back and I watched people on the internet talk a good talk, pretend they got something that's the bee's knees, right? And I'm literally out here looking at price action. I'm seeing this stuff. And everybody else is out there looking at diagonal trend lines, breakouts, head and shoulders patterns, and bull flags. Come on now. That's literally ridiculous. Like, it's nonsense. None of that stuff has any merit in price action. No matter how much emphasis and belief you place behind it, all you're doing is talking yourself into a religion. That's it. You're converting yourself to a cult or a religion. I'm bringing technical science. It's time and price. We take that time, we split it up, and grade it. And then we look for very specific things to form. By knowing these key levels, measuring out, a range, and then grading it. When you do that, you're preparing yourself to anticipate a particular formation that would support the idea of where price is going, which you've already arrived at. You start the day with an idea, where's the market likely to go? Just a real easy, low-hanging fruit objective, okay? If you strip it down and say, okay, I'm only gonna be interested in...
For procurement managers, Grainger is the go-to partner that helps keep your healthcare facilities ready.
The market, if it does this, because I know some of you are looking at this, I'm never doing this ICT. This guy's ridiculously overcomplicating things. And again, when I hear that or I read that, I see someone that is lazy as shit. Okay, that's lazy. And lazy isn't making millionaires. It doesn't happen. You might make a little bit of money here and there, but that's grocery money. I'm talking about legacy wealth. People that chase that, they're not going to be satisfied with give me a moving average and a crossover and a upswing, and there it is. Okay, but that's not it. That's not it, man. So I want to know what I'm looking at, what I'm trading, where the risks are, what can it do to turn around against me, why would it turn against me if I'm going to take the trade, where's the problem areas, what would I anticipate as a threshold that needs to be breached while in profit and not partial, but then I'm going to see an acceleration in the underlying position I'm holding to see momentum and speed and magnitude increase, where I get potentially more opportunity to get profit out of that trade. But from the beginning basis is if you just simply look at it like I'm going to show you here, this is a shortcut version, still using my concepts. You don't have to know the highest high. You don't have to predict it. You don't have to trade it. You don't have to short it at the high and buy it at the low. Okay? When you have a gap, just like that, regular trading hours. This is where we open up on 9:30 Eastern time, Friday morning, and this is where we settle Thursday evening at 4:14 p.m. Eastern time, last print. You're using the closing price. Okay? If you are a little bit more comfortable, you can say, okay, where was the close? And did it create a short-term high? If we gap higher, if we create a short-term high, just in close proximity to where the closing price is, for instance, like right here, you can do this. There's nothing inherently wrong. I actually started my trading like that. Like I looked at the last bit of trading and said, okay, this is the high at 4 o'clock. When the bell rings, ding, 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 and everybody's clapping hands like they did something special all day, they did earn something. That candle's high or low. Okay, that if it's higher than the closing price, then I used to use that when I was trading S&P back in the 90s. And I used that as my gap fill. And then I later transitioned to final print at 4:14. Okay, so there's 2 reference points there. But you have this one also, which is the finite opening at 9:30 Eastern time. All right, so now by knowing that, we have specific price levels, and we can measure from settlement, previous day to open. And we'll take that off, that. I love this stuff. I don't care what anybody else says. Like, I don't care if any of you watch my stuff. I still do these things. I still log things. I mean, I don't, take pictures of stuff like this because everything I do is hand-drawn. And I'll give you an example in a moment. So here, we have the gap settlement low. We're trading hours opening range gap low because 4:14 p.m. Thursday is lower when it closed than when we opened Friday morning at 9:30 Eastern time. So there's your gap, okay? And now we can do this. So we have 2 points of reference here, okay? We have low hanging fruit objective, and then we have consequent encouragement based on 4:14 p.m. Eastern time's standard final print as your opening range gap low. So these 2 levels are going to be important. The market should drop down into it, but the easiest one to get to is here. Wouldn't you agree? Because it's higher than that one. So now we can go into electron trading hours, go over to the opening range. All right, so now we have 9:30 open. Once we trade it back down into the range, we can trade the retest of that 9:30 opening price there, and small little gap right there. That would be your short. Very simple, not hard at all. And you're expecting the easiest objective, which would be the higher level midpoint, which is there. So your entry would be inside this fair value gap. It's so complicated, man. Why don't you just give me something easy? All right.
It's not.
There you go. There's your short. Now, in this case, efficient entry. Okay, man, I'm doing a clinic today. Good grief. I should be collecting money. Okay, straight up, I should be getting paid for this. And the way you pay me is hit the like button. I promise it doesn't cost you anything. So we have the volume imbalance high. See how small volume imbalance between the bodies, and then we have the candle wick high. There is no volume imbalance. This close is lower than the open on that, so there's no volume imbalance. So if you're trying to get this as a short, okay, where would I start my shorting at? Good question. Here in my mind, the wick right here. As soon as we breach that midpoint, I'm going to toss in 1 contract. I'm going to take it and say I'm going to go 1 contract right there. Now, scroll this over. You see this wick? That's a gap. Measuring from the volume bounce high down to that wick high, that's your full range sell side bounce buy side efficiency. Entry starts here, so we can do something like this. We'll assume for a moment that how do I do this? All right. We'll short at upper quadrant, which is above midpoint of this wick. Okay, and we'll say we're going to toss in 1 contract.
12, 13, 14.
Around about there.
14.
Right there. Okay, so you can get a visual representation of. I'll toss in a single contract right there, and then what I want to do is I'll wait and see if it can hit in between these 2 wicks. So look at it like this. As soon as we get in there and we get above 9:30 opening, I'm going to try to nail something right there too. So we'll say
It's not 17. That's crazy.
right around 9:30 and above right there. Okay, may or may not have gotten filled, but I'm just telling you the logic of what I would be doing. I think I earned the right to talk like this, by the way. But if it was to go higher, let me go back down up to this volume balance and spread this out a little bit. If you get real close to that and enter into this lower portion of that wick, at that wick low and just above it, I would throw in more. So I would start pyramiding the position in drawdown. Some of you might not be able to do that with some of the prop firms because you're adding to a position that's already negative. Okay, that's fine. Just don't trade this way then. But I don't trade in prop. I've never traded in prop ever, so I don't have those rules and constraints. But let me toss this in there. All the partners with the prop firms that join me in the St. Jude charity that you're borrowing my ICT and I'm pushing your prop firm advertising for that charity. Again, thank you for that. All the money that's going into that, if you use ICT as your discount code for the participating prop firms, all of that money goes to St. Jude. It never comes to me by way of electronic transfer or a check. Nothing. It's all going 100% to St. Jude. So I just want to thank all of you that were participating in that. But the stop loss would have to be above consequent encouragement of this wick. Well, let's see how this rolled that right in there like an ad. I'm like a natural. So stop loss would have to be just above there. So stop would be something like this. Okay. So on a high volatile day like that, if you're looking at this and saying you're entering here and your stop got to be up here, dude, that's too much. That's why you should be trading micros. Okay. And you wonder why you're getting roasted and you're blowing your accounts. That's how I would manage it. And then once it would leave this area and then completely take out that candle's low, then you can start moving this stop a little bit closer and closer and closer and closer and closer. And this candle takes out that low of that body on a closing basis right there. So the stock can then roll from here originally down to consequent encouragement of the fair value gap and then right above this high. And then it stays there. It lives there and resides there until we get to our target of half gap. And there's 2 levels. First objective here. And then that's the easy one to get to. And then the next one here, which is the classic, which you've been seeing me use and teach with. This one here is using when we gap higher. If there's a short-term high that's higher on the 4 o'clock candle, use the high of that candle. It's easier to get to it. It's faster to get to it. In this case, it hit both of them in the same 1 minute, which is fine. Sometimes it won't be like that. But you want to have your trading, your first starting to be low threshold. That means low hanging fruit, easy targets. You're not in the trade that long because it's going to be very hard for you to hold it. And you're going to graduate into holding positions longer by learning to do the things I'm telling you to do. Okay. And the only way you get that is by conditioning yourself, just like when you go to the gym, just like when you exercise good eating habits. You're not going to see results until you do time doing those functions and protocols and processes. It's not immediate gratification. And being comfortable holding trades for a longer period of time comes by way of you practicing that way. You got to stretch beyond the boundaries of your comfort. If you're a 100 handle trader and you want to get to 250 to 500 handle runs, you're just going to have to take the majority of your trade off at your 100 and leave a runner and have no concern with what it does. If it turns back and after it runs another additional 100 handles and it comes back and stops you out and you didn't make anything extra, that's still progress. You've increased the boundaries of your comfort. And that's how you get these bands of scar tissue that you have in fear. You have to break them by pressing into that fear. You got to go beyond what you're comfortable doing and be systematic about it, because you're going to desensitize yourself by doing these things with an indifference to the outcome. For instance, let's give you an example. If you believe that we're going to do a full gap closure, which is what you should always try to expect, okay, but you got to learn to take something out of the marketplace in terms of a profit. I'm looking for the black line.
You sexy little thing, gotcha.
I do the purple. If you're showing the opening range gap high here and managing as I indicated here with hypothetical, okay, we get to the first target, you want to take a partial there. Okay, that's done. And it gets down to standard consequent correction of trading hours opening range gap. That there, once it hits that, you're done. 80% to 75% of your position should be off. This is how you graduate to, okay, I'm going to wait for full gap closure. And then when it gets there, close the entire position, or if you want to stretch your boundaries, if you can take one partial off and leave something still running after that, take a partial full gap closure plus a little bit for spread. Okay, so in other words, you're not trying to get the 28,367. Okay, you're trying to maybe do 28,370. Nobody's going to laugh at you when you shorted it up here and you're getting out down here. And
What did he do again? He did.
you do, you're an idiot. By taking the position off and leaving one runner just to see if you can get an overlap of the opening range gap and then send it lower, start retracting lower, and then reaching for things like this. Watch. These will be familiar for those that have been studying for a while under my tutelage. We have the opening range gap measured, just ballparking it. It doesn't have to be perfectly on time for that stuff. Negative 20. Okay. Very, very easy, low threshold, just outside the scope of the opening range gap. Very, very nice little hands-on reaction. Isn't that nice? Okay, I thought that before. Go back a couple years in the teachings, you'll see it's there. Then you have the 50 level.
Have you ever seen a product that transforms any ordinary space into a dreamy underwater world in just 1 second? Meet the Kamau Immersive Ocean Projector, the mood light that's taking the market by storm.
Down here, and it creates a little fair bag out there, and it trades up to that and sells off and goes even lower. And then the next one is standard deviation 1. Right here. So using just the open range gap as your entry, your framework, and then expanding beyond that, how far can you reach for? Right in here. It goes a little bit more, but you don't get mad about that because you didn't get all that when you had this as your final exit. Or if you know that you can potentially try to hold for these positions, the bulk of your position gets taken off at full gap closure. Something gets off at half gap. The bulk of your trade gets off at full gap closure. Then negative 0.2, there's another partial. Because you can just go below the gap low and then rip up higher. That's why you take that. Then you take off at negative 0.5, a partial, and leave something. So you can just go below the gap low and then rip up higher. That's why you take that. Then you take off at negative 0.5, a partial, and leave something. So that we can reach for one standard deviation, negative 1.0. And that's what this level is here. And then if it goes beyond that a little bit and keeps on going, who cares? You literally went in there systematically and shorted the high of the gap, partial halfway when it's 70% likely to do so, and you give yourself that cookie, okay? And then you remove the risk. Put your stop in a position where it covers costs and buys you a pizza dinner. And then let it go. And then when we get to full gap closure, the bulk of your trade that allows you at least to have 3 contracts of like a micro, okay? 3 micro contracts still left on once you take everything else off at full gap closure. Negative 0.2, take a partial. Negative 0.5, take a partial. Roll the stop above here and see if you can get that negative 1. When you get close trade, be done, walk away, moonwalk out of there, kiss your wife, bend her over, smack her ass. All right, we're going out to dinner tonight, there it is, okay? Don't do that, she'll probably get you for domestic abuse. But the point is this, when it gets to these levels, you gotta have an anticipatory price skill that tells you this is an action point. It's not a watch and get greedy and, oh, it's gonna keep going lower, it's going straight to hell. No, you gotta do something with it. That means take it off. Or if you are thinking it's going to continuously go lower, because it's going to happen. When it gets down here, roll your stop up just above here. And when it goes down here like this, and so as soon as you breach on a closing basis between that level and that level, which would occur right there, save the stop. Because it's probably going to come back and take that out. So you're going to risk that final little partial that could have been perfectly taken off here, and a better exit than where this would be, indicating that you're going to have to kill it. So the difference between you kill it here and where you got out. That's the stuff you're going to have to live with, folks. That's trading. There's many times I've been in trades where I've had an unrealized profit on remaining portions of a trade, and my gut, my experience, my intuition was telling me, just dude, close it. But I just wanted to see if I can capture a little bit more out of it. And if it didn't give it to me, I still had the lion's portion of the move already in my bank. Like, I don't care, really, if it turns around. But then when it happens, it's like, yeah, I know I should have did that. Like Larry Williams said, you're never right in this business, okay? You're never right. You're never right, okay? But if you aim for precision and you operate with processes and protocols that leads towards that goal, but you're realistic with your engagement with price and you're not beating yourself up, you're going to do very, very well. I hope you learned something today. I hope you were inspired this past week. I hope you see that there's a whole lot more that's available with spending time with the old man. And I don't know when I'm going to talk to you again, because I might be able to put something up tomorrow. I may not. But if I don't have something over the weekend, I will touch base with you, Lord willing, on Monday. Enjoy your weekend and be safe.
I'm Ryan. I'm single.
My name is Remy.
Yes.
I wasn't wearing that.
You're not being asked to save all of us.
34 years this November. When I have a setup that is, I'm bearish, I'm in a seasonal tendency that's bearish, I have a market structure that's bearish, I have a market that is rallied up into a short-term premium, and I have a day when there's going to be a news driver that's going to be releasing with a high impact or a medium impact. So I want to see a manipulative price run, which is a Judas swing, something against what I expect to occur. Now, ideally, what I want to see is this. Right before 8:30, I want to see it drop down below a short-term low first, because that triggers individuals on a breakout short or knocks out the long holders that have a sell stop right below a recent low. Then I want to see at 8:30, I want to see it rally up Now what happens is traders are trapped going long because they're trying to buy the breakout above a recent high. And smart money goes in at that moment and sells into that rally. You can go into model 2022, wait for a market structure shift again below the low that was right before the news event. When that low gets taken out, then you have a market structure shift. When I have a setup that is, I'm bearish, I'm in a seasonal tendency that's bearish, I have a market structure that's bearish, I have a market that is rallied up into a short-term premium, and I have a day when there's going to be a news driver that's going to be releasing with a high impact or a medium impact. So I want to see a manipulative price run, which is a Judas swing, something against what I expect to occur. Now, ideally, what I want to see is this. Right before 8:30, I want to see it drop down below a short-term low first, because that triggers individuals on a breakout short or knocks out the long holders that have a sell stop right below a recent low. Then I want to see at 8:30, I want to see it rally up. Now what happens is traders are trapped going long because they're trying to buy the breakout above a recent high. And smart money goes in at that moment and sells into that rally. You can go into model 2022, wait for a market structure shift again below the low that was right before the news event. When that low gets taken out, then you have a market structure shift. When I have a setup that is, I'm bearish, I'm in a seasonal tendency that's bearish, I have a market structure that's bearish, I have a market that is rallied up into a short-term premium, and I have a day when there's going to be a news driver that's going to be releasing with a high impact or a medium impact. So I want to see a manipulative price run, which is a Judas swing, something against what I expect to occur. Now, ideally, what I want to see is this. Right before 8:30, I want to see it drop down below a short-term low first, because that triggers individuals on a breakout short or knocks out the long holders that have a sell stop right below a recent low. Then I want to see at 8:30, I want to see it rally up. Now what happens is traders are trapped going long because they're trying to buy the breakout above a recent high. And smart money goes in at that moment and sells into that rally. You can go into model 2022, wait for a market structure shift again below the low that was right before the news event. When that low gets taken out, then you have a market structure shift. When I have a setup that is, I'm bearish.
So before 8:30, you want to see my son at 8:30. Okay.
I'm in a seasonal tendency that.
This has taken me years, but it's only going to take you the next 60 seconds to figure it out. Here's the trading strategy that took me from a break-even, sometimes payout trader to finally being consistently profitable. It comes down to a simple 4-step filter, and learning to grade it is what flipped me from break-even to finally being green. Here's the process. Step 1, liquidity sweep. Did price take out a major high or low? Step 2, higher time frame fair value gap delivery. Step 3, drop to the 1-minute chart. Did price invert a fair value gap? And step 4, SISTI. Did we get a candle close through the last series of candles that led into the sweep? Now, here's what break-even traders miss. You grade it. All 4 present is an A. That's a trade. Only 3 is a B. You learn to skip it. 2 or fewer is a C, and a C is a gamble, not a setup. Break-even traders take Bs and Cs. Profitable traders only take As. The day I started skipping everything below an A is the day I stopped being even. Here's the whole thing in action. Sweep, check. Higher time frame fair value gap, check. Fair value gap inversion in the lower time frame, check. SISTI, check. 4 out of 4, that's an A. ES didn't follow the sweep, so the SMT divergence bumps it to an A+. We enter, stop above the candles that caused the SISTI, targeting opposing liquidity, which as you can see, we go straight for. Want to see how I grade the next one? I made a complete guide showing you exactly.
Michael Jai White broke the chain on the heavy bag at Legends Gym in Hollywood.
I'm telling Michael Jai White over and over, I'm trying to explain to him how bad of a Joe is with that turning sidekick. Nobody can kick the bag like Joe. Yeah. And then we walk up to the bag, he goes, I got a pretty good turning sidekick too.
Eddie Bravo wanted me to demonstrate the sidekick. And this is, I guess, after Joe was kicking.
This dude does a sidekick, a hopping sidekick, slams it into the bag goes against the chain, and the chain snaps.
The bag, all that kind of stuff, almost kind of hit it and act like it was broken before, whatever.
Eddie Bravo was like, what the f? Michael Jai White is legit. But Michael Jai White had a bunch of fights. Michael Jai White had a bunch of he had a bunch of Kyokushin fights.
What's the worst injury you've ever given someone in a fight?
Years ago, I was on the Metro North train, and some business guy, kind of big dude, he starts talking to me. You broke my collarbone, 3 of my ribs, and fractured my hip bone. Yeah, back then, man, we were training when it wasn't even popular. You know, I used
Yeah.
to see you in the gym all the time.
Yeah.
All the time.
How good is Joe Rogan really in MMA?
Very good.
Very good.
Very good. I say he's number 2 best back spinning kick I've ever seen.
I remember that.
I say he's
Very.
all the time.
Yeah.
All the time.
How good is Joe Rogan really in MMA?
Very good.
Very good.
Very good. I say he's number 2 best back spinning kick I've ever seen.
I remember the bag when you were working in, it was a freaking hole almost in the bag. It was like a curves in the bag, like with your footprint in it. I'm like, it's completely insane, man.
It's a lot of power.
I saw you kicking the bag. I was like, damn. I know you was good at jiu-jitsu. I didn't know you could kick like that.
Yeah, that's what I used to do. I was a Taekwondo guy. That's how I started.
He'd be training all the time. Most of the time I'm going there, he's training.
I never seen a human being physically capable of hitting something with that much force than you. It's not because you're stronger. Yeah, you're a strong guy. You're a good athletic guy. But you know, like you're older than me. Why? Because it's your form, the technique, the vector of force. Everything is all freaking perfect. That's why when you turn and you make that spin like, I don't care who you are. If you Francis Ngannou, you hit that on the face, you're gonna be dead. You know, like not dead, but you're gonna be knocked out, man. This is crazy. You know what I mean?
Michael Jai White broke the chain on the heavy bag at Legends Gym in Hollywood.
I'm telling Michael Jai White over and over, I'm trying to explain to him how bad of a Joe is with that turning side kick. Nobody can kick the bag like Joe. Yeah. And then we walk up to the bag, he goes, I got a pretty good turning side kick too.
Eddie Bravo wanted me to demonstrate the side kick. And this is, I guess,
On the 15-minute time frame, this is going to give me all of the salient points of liquidity that I believe is going to be pertinent to the session that I'm going to trade or about to trade. And it also will have the built-in advantage of showing me the daily levels that I'd be interested in. If I'm just going to trade the full daily range, if I want to get the lion's portion of that full daily range, whether it be an up day or a down day, I can determine those points of liquidity on the 15-minute time frame. And
yeah. It's hey.
It's done.
Can't even see it.
You didn't define the curls today.
No, I didn't. I just.
She got some a bunch of highlights.
Yeah, I can see it.
You like it?
Yeah, it looks nice.
Thank you.
Why are you squinting? We need to get them out.
I can also see all of the pertinent imbalances. On the 15-minute time frame, this is going to give me all of the salient.
I thought you was looking to see what time they start.
Shit, I was.
But what? Washing clothes now too.
Shoot, I mean, I never did before, so.
So we gonna learn till you go Marlton AMC.
AMC? Nah, I did Cinemark.
Huh?
I did Cinemark.
Which one are you doing? The Marlton one up here, or are you doing the Summerdale Cinemark?
Cinemark.
That's the one you want to do? Okay.
Yeah.
Take a shower. I'm sweating like crazy. This is trash, right?
Yeah.
You need to change your sheet. Don't you have, do I have another full size sheet?
Available seats. Selected seats.
This needs to be washed. Why does the little bed keep going over?
No, you did not, Taylor. So you watched that today? Ah. Alright.
Full size sheet. My God, that woman worked me out. She was no joke. I was looking at her like, dude, what? And your daughter. Trying to put sheets on a bunk bed. Ooh, child.
Points of liquidity that I believe is going to be pertinent to the session that I'm going to trade or about to trade. And it also will have the built-in advantage of showing me the daily levels that I'd be interested in if I'm just going to trade the full daily range. If I want to get the lion's portion of that full daily range, whether it be an up day or a down day, I can determine those points of liquidity on the 15-minute time frame. And I can also see all of the pertinent imbalances. On the 15-minute time frame, this is going to give me all of the salient points of liquidity that I believe is going to be pertinent to the session that I'm going to trade or about to trade. And it also will have the built-in advantage of showing me the daily levels that I'd be interested in if I'm just going to trade the full daily range. If I want to get the lion's portion of that full daily range, whether it be an up day or a down day, I can determine those points of liquidity on the 15-minute time frame. And I can also see all of the pertinent imbalances. On the 15-minute time frame, this is going to give me all of the salient points of liquidity that I believe is going to be pertinent to the session that I'm going to trade or about to trade. And it also will have the built-in.
You know, dishes washed by hand may look clean, but can have invisible food residue left behind. Get a better clean with Cascade Complete. These action packs have Dawn to tackle grease, leaving nothing behind but shine. Whoa, I'm handsome. New Cascade Complete.
YouTube, what it do? Hey, listen, I've been getting a lot of comments saying you gotta watch Casanat take Tyler to Disney World and all that type of good stuff. And I didn't want to watch the full stream of him at Disney World. And I peeped at my brother Taekwondo and broke down the whole video. I haven't watched it yet. I haven't watched Taekwondo in a long time, so I figured this was the perfect one to react to.
I was just playing. She dead serious. So it really just did that. So 25 level. It didn't hit though. It didn't hit that, but that's fine. Now if I'm being real, So you would think, but like, truth is, I read it the other way around. Yo, what do y'all want, man?
Prophet Aaron? Hey, what are you doing, bro? I'm trying to have a conversation with Sula, bro. Yo, what is this guy doing, bro? You'll be quiet now.
Celebrity has power in it, but that's only because Titus spelled it that way. It doesn't make Tick special. Certainly not obligated. He showed up at the realtist's office this morning and tried to shoot me. If he keeps operating in the way that he is, he's going to get you killed.
Manny, how's the Spider-Man movie?
You get to watch it.
That's good. That's good. Oh yeah. You know Lexi called yesterday?
Yeah, Bob was telling me.
Oh, for real? Your boss, she called you too? Yeah, she called, bro. I'm like, bro, what's he tripping about, bro? It was the group chat. It was someone called the group chat. And I just joined. It was just Lexi in there. I'm like, bro, what the frick is this? She's like, where's Manny? Where's Manny? I'm like, bro, what are you talking about? I'm like, I don't know, but she was like, what's Manny's number? What's Manny's numbers? What's Manny's number? I'm like, shoot, I don't really do anything for free, bro. You got PayPal?
You serious, bro?
Yeah, she got mad. She's like, oh my gosh. I'm like, you know how she talking stuff, bro.
Bro, I believe what Bob was trying to say. She probably was. I don't know.
She probably want Manny.
No. You said she was with another dude and she want me to join the call, but.
She want Manny to be like Zula 2.0, boy. Watch her get
Yeah.
scratched.
That's what that's her plan, bro. I'm telling you, bro. She doing everything.
God bless you,
in her
Opa.
power to
I
make
ain't gonna lie to you.
Cheyenne made Zula watch her get scratched.
Let me add Laxi right now.
Nice, Zula turn. Nice, Manny turn, boy. Where's Manny? Manny, come look at me, got scratched.
Hello,
What the is? God bless you, bro.
I think it's a Shine 2.0.
Cheyenne 2.0, boy.
Pick up and roll the dice, reading between the lines.
Stop looking at you and me, bro. Yo, you sick in the head, bro. Leave me alone.
I'm gonna call Zula.
This guy has a problem, bro.
I got God bless Roland Dean's soul, bro.
Come on, man.
I'm telling you,
For real, though, like, he just don't understand everything he talks about Muffin, bro. It's just like, it's just crazy, bro.
Like, Bob, how are you ever supposed to have a daughter, bro? Like, come on, bro.
Daughter? That's the sin of my eyes.
What do you mean that's a sin in your eyes, bro?
I can't get a daughter, bro.
What do you mean that's a sin in your eyes? Why not?
That's a sin, bro.
Oh my days.
Call me if you find Heinz worried. What galaxy could sustain
Bro, ain't nobody trying to watch that, bro.
But, Daddy.
Daddy?
What the frick? Predicts the relative position of planets.
And this man's gonna be really listening.
Get him. Good. Get him. Get him.
You watch Lovecraft?
Get him. Good. Get him. Get him. Get him.
That's foolishness, bro. It's like what people do in witchcraft, but nobody trying to watch that.
She literally bought for me. Which? You somehow figured out.
You know, you just.
Hold on.
Yo, I'm so dumb, dog, but I'm just adding more demon problem. You already see the dude get on your job. Do that in more.
Fatima, I seen a shadow. Oh, wow, shut up, bro.
You probably make me laugh, dog.
If I had teleportation magic, I would teleport Muffin right to you, bro.
Hey, freaking man.
Scratch her right in this bed, bro.
I'm gonna say you teleport Muffin.
My boss said I seen a shadow on the right side of my bed. Oh my gosh.
Muffin would be scared of you, bro. I don't know.
She'd be scared of the tool?
If she saw you, she'd be scared of you. You was a short. Why? You want her? And she told you what?
I'm not gonna argue with you right now.
It ain't gonna work out. But she told you what? She need a big dog. She need a big dog. You wanna see? You wanna see? I give mamas the tool. Now they going crazy. You wanna see, bro? She need a big dog.
Your little shit need to calm down. Yeah, I'm gonna call you up that. Let me watch it.
Yeah.
Yes, what up?
Yo, be quiet, man.
Kila show. I'm gonna watch some movie. Kila show, bro. How about you go learn how to trade? What do you go practice? Enhance your skills.
I'm gonna call you back up.
Watching some love magic. A flip.
You back home, Manny?
No.
Alright.
No, I'm not back home. Bro. Why the hell was she calling at that time, though? You know? This girl not sleep, bro.
I don't know. She was some stuff. I guess she really do care about you, bro, because, gosh dang.
Noah.
You climb all the way up the stairs with this thing?
Wait, you climb up the stairs? What the? That's crazy. Bruh, I'm telling you, bruh, she cares for me, bruh. Tell you, bruh. What did I tell you? Everything that she does is for me to come back, bro. But it's not gonna happen. It's never gonna happen, bro. I don't care. I'm gonna go somewhere. Where's money?
It's 12 already. Gosh. I'm not gonna lie, I was up until 1 a.m. yesterday. That's the only way I answered.
1 a.m. Why so late?
You know, I was practicing, bro. Trying to use the techniques.
Bro, you probably was on Amigo, bro. Were you?
Of course, bro.
No, I'm waiting for market to open, bro. Can't lie.
Huh?
EUR is. I'm waiting for market to open. EUR is quite interesting.
No.
Waiting for market to open. And big trade.
I'm thinking about going to see Spider-Man with my mom.
I could go see it today, you know.
Huh?
I could possibly go and see it today.
Shoot.
I could probably see it today if you tell me, man. Time is now 5.
Cold as shit. No, I'm not. No, I am not. I refuse to do
I don't know if I should go see Spider-Man with a girl or not.
Man, stop acting like you got options, bro.
I do.
You ain't got no options, bro.
I'm in my city, bro.
Alright, so call someone other than your smoking friend. That's the only option you got, bro.
You're funny.
You ain't got no other options, bro. Get options that you actually want.
Good said, close already. Then you smoking friend.
I mean, you settle for the bare minimum.
What's the bare minimum?
Smoking friends, bro. Find something you actually want, bro.
Wait, you talking about the... Wait. It makes sense now because Cheyenne, Smoke Buddy, pregnant. Ah. Okay, I understand now. I understand. It all makes sense. Nah, bro. I don't know if I should go alone or with someone.
I'm going through the city. Top off. This is so free. Bro, I need to. I'm walking outside.
Check me out, bro.
Gosh, dang, bro, I ain't gonna lie to you.